Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of Wall Street. Today, we're diving into a report that's a bit like a blank page in a choose-your-own-adventure book. It might take a little while, but we're going to try to make something interesting out of it. This is Aura Fat Projects Acquisition Corp's annual report. In a nutshell, it's about a company that hasn't really found its story yet. They're what's known as a SPAC or Special Purpose Acquisition Company. Basically, they exist to find another company to merge with and take public. Think of them as corporate matchmakers, but without the dating app. First things first, it's a Form 10-K, which means that it's the end of the year and Aura Fat Projects has to come clean about what's happened, what hasn't, and what might happen in the future. A lot of the report is a reminder that they're still looking for that perfect merger partner. The report is for the year that ended in November of 2024, so let's see what's been going on and how long they have left to find a deal. Time is ticking because Aura Fat Projects needs to complete a merger by July of 2025. If they don't, it's game over and they have to return the money they raised to their investors. There's also the possibility that the shareholders vote to push that date out further, so that could happen and we could be here again next year. The big news from the report is that they had planned a business combination with a company called Allrights. Allrights is a Singaporean company, and the proposed deal involved Aura Fat Projects acquiring Allrights and making it a wholly owned subsidiary. This plan is currently up in the air. In January of 2025, there was an amendment made to this deal. That said, the entire plan is still up in the air as of this report. To get the Allrights deal done, the company needed to register a whole bunch of shares. They filed what's called a Form F-4 with the SEC, which is basically a document to register the new shares and also provide information to shareholders so they can decide if they want to approve the deal. It's not been that easy though, because the SEC, the government watchdog, sent them comments and had some questions that they needed to respond to and refile. So they did that in September of 2023 and got more comments in October and are refiling again. This could be a sign of how confident to be in the company. The more back and forth with the SEC, the harder it can be to get a deal done. What is Aura Fat Projects actually looking for in a merger partner if Allrights doesn't pan out? The report lays out some broad guidelines that they're looking for. They want a company with a solid market position, the potential to grow, its own technology, and a good management team. Here's an interesting detail. They will not touch any company with significant ties to China, Hong Kong, or Macau. Their focus is on Southeast Asia, Australia, and New Zealand. So how do they find companies? It's all about who you know. The management team relies on their network of contacts and relationships to find potential merger targets. They also get ideas from investment bankers and companies looking to sell off parts of their business. The report mentions that the company's executives and major shareholders are allowed to buy shares of the company. If this happens and they think that it will affect the vote, they have to disclose it. Public shareholders of the company have the right to redeem, meaning sell back, their shares. This redemption can happen either with a shareholder vote or through what's called a tender offer. If the redemption rates are too high, so many public shareholders want to cash out, then the deal doesn't happen. To avoid a situation where one large shareholder blocks a deal, there's a limit on how many shares any one person can redeem. That's 15% of the total. The report includes a section titled Mine Safety Disclosures, but is marked as not applicable that shows how much of a shell company it is. The units, shares, and warrants are not currently listed on any market. As of February of 2025, there were only a few holders of the units, Class A shares, and warrants. This is definitely a sign of how much trouble the company is in. For the year, they made a profit of around $190,000, driven mostly by the interest they earned on the money sitting in their trust account. On the other side of the coin, they spent over $900,000 to keep the lights on. Here is another bad sign. The amount of cash that the company had available as of November 2024 was under $50,000. Compared to $233,000 in the previous year, this is a huge decrease. They need to finalize that merger soon. The auditors themselves actually said the magic words that you never want to hear: substantial doubt about its ability to continue as a going concern. Translation: there's a real risk they might not be around much longer. The company is paying an affiliate of their sponsor $20,000 per month for office space and support. These fees began when they first filed to go public and stop either when they merge with another company or when they close down. The people who helped the company go public are entitled to a fee when and if a merger happens. It appears one of the directors, Andrew Porter, stepped down as CEO of FinTech Australia in June of 2022. We can chalk that up to him getting a new director position in Orafat projects, and those often require a lot of time. The good news is that they haven't been involved in any recent material disagreements with their accountants. It seems to be a normal engagement. The bad news, internal controls or the processes and procedures a company uses to make sure their finances are accurate weren't effective. A key issue was inadequate segregation of duties. It means that there weren't enough checks and balances in their accounting processes, so now they have to put some additional accounting policies into place. They have a code of ethics and other committees to ensure that the executives don't get up to anything that might violate the law or be suspect to investors. But the material weakness in their finances seems to indicate that something may be wrong. The report lists who owns the company, which consists mostly of the sponsor. It also mentions that these people are not planning to exercise any benefits they might have, such as getting their shares back in the case of liquidation. The company accountant is Malone Bailey, which also audits many Chinese companies that have been subject to scrutiny in the past. In case you forgot the key highlights, let's take a look. Orafat Projects has until July of 2025 to complete a deal. Overall, reading between the lines of this report, it doesn't paint a particularly rosy picture for Orafat Projects Acquisition Corp. The clock is ticking, their cash reserves are dwindling, and the SEC is taking a close look at their proposed merger. The auditor's warning about their ability to continue as a going concern is a major red flag. It's definitely one of the zombie SPACs that need to merge quickly or close down. Orafat Project's strength is really their management team's experience and connections, and that team has worked hard with multiple extensions to find a deal. Their weakness is that they have struggled to find a suitable business to merge with in a challenging market for SPACs and initial public offerings. One of the biggest risks they face is the possibility of not being able to find a deal at all. If that happens, investors will get their money back, but the company itself will cease to exist. On the other hand, there's also an opportunity here. If they can successfully merge with a promising company, they could create significant value for their shareholders. In conclusion, Orafat Projects Acquisition Corp. Is at a critical juncture. They need to overcome these hurdles in order to become an entity that can survive and return shareholder value. Thanks for watching, and now you know a lot more about the inner workings of a blank check company. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decodings.